So, good afternoon, ladies and gentlemen. I have the big pleasure today to moderate the container shipping panel with these fabulous panelists. And we're here at Marine Money 2025 in Singapore, so time is flying. It's end of September, it's end of Q3 2025. So the first question to you, Ofir, how would you sum up the year 2025 so far for container shipping and for express feeders?
Okay, good afternoon. You start with the easy question. Okay, so 2025 so far been great for us, very good for the overall container shipping market. Seeing the remaining period for the year, we are still seeing a strong demand for feedering activity. So we expect to end 2025 as another very good year for us, most likely the second best after 2022 that we will never be able to beat, but still extremely good market and result for Express.
Okay, so the first question was too easy. I tried to make it a bit harder for you. Yeah? And you know, we bankers, we love the crystal ball questions. So looking into 2026, do you think the sun will keep shining on the container shipping industry? Or do you expect some dark clouds on the horizon?
So this is really a tough question. The toughest that I've been asked by all our lenders and people that I meet. Unfortunately, we don't have a crystal ball, and we talked about it, you know, every year, the same questions. And if you ask our view, so we are always expecting the next year to be a bad year, and we are happy to be wrong about it. So looking at 2026, the fundamentals are not good. The overcapacity is there, the things that are happening in the US, the risk over the demand that's coming from the US, which is the bigger consumer side, is very worried. There are a lot of geopolitical conflicts that, lucky for us, bad for the world, are positively affecting the shipping business, and if they will resolve, most probably will have negative impact on shipping. So a lot of moving parts that are very difficult to predict what will happen. But in general, I think that looking ahead at the sky being a bit darker and preparing yourself for the downturn and for the market to reverse is the right approach. Still pursue for investment and not be worried about the medium long term, but be very cautious about the short term is our strategy and my advice in general.
Thanks a lot, Ofir. Now, Sören, we know each other for some years, but for the preparation of the panel, I went on Nordic Hamburg's webpage. And Nordic Hamburg, according to the webpage, is identifying, structuring, financing projects in today's shipping market. So maybe you can share a bit which opportunities have you recently identified and which projects have been happened with your company recently.
First of all, thank you very much for Marine Money to be here. And thanks for looking at our website. I think that's not a common medium at the moment anymore. A lot of people are on LinkedIn and so on. But so our business model is, although we look to the outside as a ship owner or ship manager, we are really a project developer. So our investors are not partnering with us so that we can speculate with their money. We put projects together. So that means employment, debt, equity. And if you do a new building project, also a shipbuilding slot. So that makes it very difficult at the moment because the balance sheets are very cash rich on the liner side. And we, as I said, we don't speculate. So we need partners to do projects that are somewhat bottom up. And we see that still in the feeder segment. We see a few markets that are interesting, like the European feeder market is a bit outdated, so there are opportunities there. There's also a diverse kind of atmosphere of liners, so not all of them are owning their own assets, so we have a role to play. We like that. And then, all other feeder markets like Southeast Asia or the Caribbean, for example, have the same attributes at the moment. What have we done lately? We did projects where we purchased ships at elevated values, yes, but we were able to de-risk those to more, I would say, historical means by an initial charter. And then the second thing we did is a new building project that delivered last year with carbon capture, together with Purus Marine. And these ships have 10-year charters, so it's a very structured project with locked-in cash flows.
Thanks a lot. Pierre, Société Generale, SKFW IPEX-Bank, by the way, is a big lender to the container lining industry as well, in Europe, in Asia. So how's the appetite of Société Générale for container ship financing these days? Are you still very bullish or becoming more selective? Yeah, like when you look into the huge order book and also the high order contract prices.
Yeah, good afternoon, everybody. Thanks, Stephan, for your question. So the answer is quite simple. Yes, SocGen is still very supportive of liners and container ship tonnage providers and feeder operators. We have been supporting the industry during good days and bad days. I want to highlight this, and we are committed to keep going. So, why are we supportive? Maybe a little bit of a disclaimer before I explain why. The business is notoriously difficult to predict. Last year I was sitting on a similar panel and I said, 2024 is better than expected. This year I'm saying the same thing, 2025 is better than expected. So yes, I keep getting it wrong somehow in a good way, but it's just because some things are just very difficult to predict, you know? Who would have thought that Q2 and Q3 would be so good for liners this year because of this front loading, which was due to this Liberation Day, which was, again, the magnitude of the tariffs announced, even though they ended up being lower, was still very, nearly impossible to predict last year. Now, that I made a bit of the disclaimer, fundamentally, as mentioned by Ofir, there is a massive order book in the container ship industry, especially for large vessels, okay? And we know that the trade growth will most likely slow down next year. So as Ofir says, there is recipe for oversupply. How and why do we keep being supportive? Well, the big difference, I think, with now and previous so-called pre-down cycles is that ship owners across the board are so healthy financially, lowly leveraged, cash rich, and obviously when you do shipping finance, the first line of defense when you lend money is to see the creditworthiness of your counterparty. And the reality is that when I look across the board right now, not only liners but also smaller players, we see that people are very healthy and I think ready to weather potential bad days. Another thing that I'd like to mention as to why we keep being supportive is the fact that the industry is less fragmented than before. And therefore, if bad days come, and they will probably come, it will be less a question of survival and therefore probably more discipline in those conditions. Therefore, it's another mitigating factor. And the last point before I stop is probably the fact that, yes, there is a big order book, but the reality is that you need a renewal of the fleet, you know, for ESG considerations, efficiency, etc. So at the end, yes, the order book is massive, but, you know, it will be partially absorbed. And therefore, I think we remain very positive and supportive.
Okay. So Société Générale stays supportive and positive. And yeah, there are other lenders which stay supportive. There are Chinese leases houses, there are the capital market. Everybody is chasing for the same deals, and everybody is chasing for you, Ofir. How do you feel with that, to be in such a position, also compared to the position 10 years ago?
To be honest, of course, I feel I'm in a good position, sitting on the right chair. So it's very good that people are knocking on your door and wanting to finance you rather than you need to chase for it. We've been also on the other side, so happy to be in this position. Having said that, you also need to be very careful how you plan your financing and how you diversify it. You can't put everything into the cheapest deal that you are receiving. Like Pierre said, you need to find the banks, the lenders that will be with you at the good time, but also at the bad time. And coming from Zim and being into 3 financial restructuring, you know how is it to deal with banks that are not on your side during the bad time. So we are very mindful and planning our steps accordingly to really keep doing business with our traditional long-term lending partners, even if they are even more than slightly more expensive, but also tapping into the more cheaper or lower financing that is currently available in the market.
I heard that was slightly more expensive, Ofir. Yeah. So, and there are so many bankers here in the room as well, and we would like to hear the secret. What are your key criteria when assessing a financing structure?
So, as I've mentioned, it's first look at who is your lending partner and working with traditional ship finance lenders that know the business, understand what you are doing, and will be with you at the good and the bad time. And we are trying to do different type of structures. So historically, feedering business was asset light, so we didn't have a lot of experience with cheap financing, but over the past 5-6 years, we have built quite a massive asset, a number of vessels, so we have learned and we have developed our financing structure, and today we are doing, I think, almost all the structures available, starting from straight vanilla term loans to JOLCOs, now Chinese sale and leaseback financing, French tax lease with our friends from Songen and other French banks. We have recently did some revolving credit facilities, looking at our strong balance sheet and cash positions. So we have used it to repay some of the short-term loans and replace it with the revolving credit facilities which are committed and secured by our second-hand unencumbered vessels, which make your available liquidity cheaper than having loan, paying the full margin and keeping the cash in a fixed deposit that yield much lower return for you. So really we are looking at all the options and trying to diversify and learn from our bankers as much as possible. And we appreciate their support and willingness to share information and help us to do better in how we manage our balance sheet.
Thanks, Ofir. That helps a lot, yeah, for the next offer then. Pierre, when you compare container ship financings in Europe and in Asia, do you see any differences in pricing, in structures, in financing strategies?
Structures, no. No differences. No, essentially different sets of products from commercial debt to ECA and leases. That's, I think, more or less the same. Pricing, what I do see is that there is even, so it's competitive everywhere when it comes to senior debt pricing. Shipping has been doing so well over the past few years. As we all know in this room, that you do have a lot of new banks and new lenders coming in and being very hungry and, you know, attracted by the creditworthiness of the ship owners, as I just mentioned. So you have the historical lenders, so I would put my bank in this category. And you have the newcomers, let's say, well, certain geographies, not so new anymore, but obviously, you know, from Singapore, Taiwan, China, and as a result, I would say that there is even more competition and therefore slightly lower pricing in Asia when it comes to debt pricing.
I would agree. And Sören, I mean, how do you finance your projects? Do you mainly use non-recourse financing, and do you also tap into non-traditional ship financings?
Yeah, I think it's the nature of our business model that we do non-recourse, because if the equity is in club deal structures and we are sharing that, we cannot guarantee for the whole project. So it's non-recourse. We have still the supportive banks around that do that, and we get a lot of support. But we have done also alternative lending recently with offshore, where there's not a lot of capital available, and Chinese leasing is an interesting alternative still for us, for ships that obviously don't trade US, and that is the case for our European feeders. So these ones are, I wouldn't say they are not non-recourse, but they are getting covenant light to a degree where we can also live with it and work with it.
Ofir, back to you. Let's talk a bit about ordering new builds. Pre-COVID, it seemed like Express had a preference for second-hand tonnage, and then during the pandemic and with the boom of the container shipping market, you shifted to ordering new builds with more recent orders in China. Can you explain a little bit the reasons for this shift in the ordering or in the tonnage strategy?
So initially during COVID, there was a very good opportunity to buy second-hand vessel. There was a mismatch in the market between charters become long and very expensive, and S&P, because the decade before COVID, when shipping was under stress, a lot of assets were owned by PEs and banks that wanted to get rid of this and take the opportunity that prices are starting to go up and sell the vessel. So we identified these opportunities and bought quite a lot of second-hand vessels. But like every good things, it comes to an end. Good things never, they don't last forever. And then we have identified that ordering a new vessels, then prices at the shipyard were still reasonable. It was just the starting of all this crazy order period, and we simply moved to be maybe the first one to order, to put relatively a big order of new vessel with the strategy. The second hand was more opportunistic purchase, using the opportunities in the market, and the new vessel order was really strategic to build our fleet toward the next decade with all the decarbonization period coming, so to have the youngest and the most efficient fleet among the feeder operator, but also looking at our customers, which are the main shipping line. So they are investing in the big vessel, they are not investing in the feedering side. And for us to be able to offer them the best product, having the youngest and the most efficient vessel should, and we see it now, give us a huge advantage going forward. And this was our decision. This day, of course, prices of ordering new vessels are at historically high. We are still ordering, despite this fact, we are still ordering because we still see that there is a shortage in the feedering size vessel. The average age is getting older and older. When you look at the number of vessels which are over 20, in some segment it is more than the order book. So we feel that even with the current high prices, there is logic to invest and to order new vessel, which will give you the advantage coming in the next couple of years that still makes sense to make the investment.
USTR is a big topic also on that conference. that also influencing your order decisions?
Not for us, because luckily we are not affected from the USTR. We don't have any vessels calling the US. There is no feedering being done in the US because of the Jones Act. So not an impact for us. On the contrary, we are benefiting from it because since our vessels are not calling the US and we're not considering this issue, we are having a better financing opportunities. So, yeah, not an impact to us.
Thanks a lot. Sören, Nordic Hamburg was one of the pioneers in LNG dual-fueled vessels. Nowadays, LNG dual-fueled engines are quite common on container ships. So as you identifying the trends, could you say, what do you think is the dominating technology in 10 years on container ships?
Yeah, indeed. I mean, we started with LNG propulsion on container ships already 2013. And by the time we had all the puzzles together, all the pieces of the puzzle, it was 2016. But yeah, LNG has been a real success. So it's running well with the crews. The maintenance intervals are extended, and so technically it's a very good solution. And if we speak about new trends, I still believe that LNG has a long leeway to go because it's very suitable as a drip-in fuel, because we can in fact mix in biomethane or e-methane, bio-LNG, and there's no problem in mixing that. Whereas in liquid fuels, we all know that you cannot mix fuels of different grades. So, and the infrastructure is there. I mean, the previous panel was quite interesting. There's a lot of LNG bunker ships coming, still a few missing. But it's coming and it's there. So I would say in the foreseeable future, it's LNG, and we see that in the order book of the vessels, that the liners are opting really for LNG. We see a few phenomenons. Fuel EU Maritime is an interesting vehicle because it pays you to be over-compliant. And we see currently some developments that batteries are becoming interesting, because by 2030, whenever we are alongside a container terminal in Europe, we have to plug into the grid. So why only feeding that into your hotel load and into your reefers? You might as well charge a battery while being connected. So I think that there's some interesting trends coming up. And we can, talking about alternative or more exotic financing, we can actually tap the EU ETS kind of bank account and ask them to provide support for us. And we in fact have an ongoing subsidy application for such a concept at the moment. And so I think but that is restricted to short sea. We all know that, because after all, we want to carry cargo and not batteries, and that is just not feasible on deep sea. And then we believe in ammonia, because you can produce this in a decentralized manner. You just need water and green electricity. At the same time, you don't have to deal with CO2. So CO2 is out of the equation. And whether this is going to be burned in a combustion engine, we are unsure about that. Probably fuel cells will play a big role, but if you really want to go down the zero path, ammonia is a good option. And having these 4 CO2 capturing units on our ships, we believe that this could play a role to extend some of the ship's life as well.
Thanks a lot. Ofir, the first methanol dual-fueled vessels for Express have been delivered. Maybe you can share a little bit of your experience with these vessels.
So I'm not sure my lender will be happy to hear what I have to say, but contrary from what Sören said, the methanol is on the other side of the equation, so LNG is very successful for them. For us, the methanol investment is not the same. On the operational side, I can say that it was a very good experience for us, being one of the first to operate methanol vessels. We overcome the challenges, and I think that we did pretty good job. We have hired At the technical superintendent level, we hired people which came with experience. On the crewing side, we had to train them. There was some learning curve, but overall, the operation went quite well. Unfortunately, on the commercial side, and eventually with us being able to burn methanol, it's a different story. With the EU changing the regulation mid of last year, it actually killed the methanol for the coming maybe 5 to 6 years and put the LNG back to be the superstar. So if you look at the order book before, most of the order book was with methanol dual fuel vessels. After the change, everything moved to LNG and conventional vessels. When LNG is getting the same benefit as renewable energy, which costs 3 times more to do the same or to get the same energy efficiency, nobody will pay for it. And we had one customer that was willing to pay the commitment for 3 years. It started to get attractions from other customers, but when the regulation changed, no more. It's really killed the requirement, and even the one customer that committed for 3 years, they have asked us to stop burning the methanol as from July, because customers are not willing to pay. So unfortunately for us, the story is that going forward, until there will be changes in the regulation, we will not burn methanol with our dual fuel methanol vessel. We have 14 of them, and they will continue to burn black fuel and pollute the environment because there is no regulatory support to really reduce the gap between the cost of running methanol to LNG or black fuel.
Thank you, Ofir. Pierre, Ofir already mentioned French tax lease, and Société Generale is offering that product. Can you tell us why you think it's quite an attractive product, despite the high liquidity in the market and some complexity of French tax leases?
So first of all, French tax lease is a very established product. Okay, it's been around for 25 years. It's been very stable. That's one thing. Second thing, it's quite advantageous in terms of benefits for whoever is tapping into it. However, there is a lot of constraints. And by the way, non-French ship owners have successfully invested in France to get this product. But you really need to have a long-term view. Basically, what you need to do is to establish fully fledged operations in France, not only just an office, but also commercial operations, technical operations if possible, hiring French people on shore. You need to flag your vessels with EU flags and French flags. You need to hire French crew to some extent. So it's long-term investments, and you wouldn't do that for a couple of ships, right? You need to have a strategic move to invest in France and in the EU if you want to benefit from this product. A last thing which is very important here is that one big limiting factor of ship owners not being able to necessarily tap into this product, in addition to what I just said, so the long-term investment and the volumes, is the limitations in tax capacity. So bear with me, I'm going to try to explain to you what it is so that you really understand. So under this scheme, the vessels are owned by SPCs, which are owned by the banks. Then the vessels are chartered to the initial ship owners. Because of a short amortization, there is a tax deficit created at the SPC level. As a result, the banks who own these SPCs can reduce their tax bill thanks to this tax deficit. And all the money that they would have had to pay to the tax authorities without this tax deficit is partly shared with the ship owner. Okay? This is the whole point of the scheme. And in order to share this pot of money, you basically need to have a profit to be taxed in the first place. And this is what we call tax capacity. You don't have a lot of this because you have only 5 or 6 French banks active in the space, and with our long-term established clients who are tapping into this. So it's not like it's necessarily an open door for everybody, but obviously happy to discuss and explain things for newcomers.
Thanks, Pierre. Kevin, do we have time for? No, we have no time. Okay. But these gentlemen and myself, we are around outside. We can have a coffee. Thanks a lot. It was a great panel.
Thank you very much.
Thank you very much.